This order block trading strategy will take your swing trading to the next level. This easy swing trading strategy will have you banking more pips and profits if you just stick to the strategy I share with you. So stick around until the end and I'll explain everything in detail. So now we're on the chart. Let's look at institutional order flow to help determine a bias. Now we're using an easy one here in Euro USD, as even Stevie Wonder can see we're bearish. So now that I see the institutional order flow is bearish, let me put the drawings back up. What I'm looking for is, and go back to the monthly actually, what I'm looking at when I'm swing trading, I'm looking at the previous month high and low and the current month's high and low. And so once I mark that out, those are going to be like areas of liquidity where I think price can draw to next. So on the monthly chart, that's all I'm looking for. I'm looking for the previous month, the current month, both the high and low, and, you know, coming back into the weekly chart, we can kind of, you know, refine those highs and lows and get them kind of more on point per se. So once I see that, that's all I'm looking for. I can look for, you know, imbalances or fair value gaps where price can draw into as well. But if it's too far out, then, you know, I'm not going to pay too much attention to it. The daily chart is where the magic happens, I should say. I tend to like to execute on the daily chart whenever I'm swing trading. I'll go down to the 4 hour and 8 hour if I want to refine just a little bit, but if I'm being lazy, I will, you know, tend to, you know, just, you know, stay on the daily chart, because, you know, I can kind of just place my order at the price that I want and just let it ride. So when I'm looking at this price action here from a daily perspective, and we have everything refined, we see where the current month high is, where the current month low is. It's already been made. So if it's early in the week, or it just all depends on timing, but for the most part, when I'm on a daily chart, I'm looking at where the order blocks are, okay? And then I'll refine onto the 8 hour and the 4 hour to find those kind of hidden order blocks. So you can see here that this area was a supply area or a bearish order block here, this whole little area, this whole up move here. Then you get that down move, you get the break in market structure right there. And then you get that pullback into this order block. And it actually starts right here, if you can see it. So, you know, I got everything already kind of drawn out. So you get that purge of liquidity at this area, and then you get that break of market structure, and then price comes back into this area. Now price could have come back into this area, but it looks like price, you know, sort of has been mitigated at this point. So price breaks structure, and then you kind of see it happening over and over again. Okay, it's not perfect, but you know, as you see that break, and as you see that pullback into those areas, that's where you typically would like to execute. Now, if we're looking at present time, right? If we go down to, we're looking at like this little area here where prices, we're trying to predict where price will go to next, right? So right now we can see that price, you know, this, you know, as of recording this is a Friday, so price is just kind of inept, right? The price is just kind of just bouncing around, contracting. But if I were to see where a good area was, like for instance, this was a trade that I took, right? So price came into this 8 hour order block, and we took out an old daily low and then came right back in. So right here would have been, this is an entry. Stop loss would be above the the supply area or the bearish order block. Okay. And if I'm going after the old daily low, you know, we got a 1 to 3 here, close to a 1 to 3. We can make that a 1 to 3 if we bring down our stop loss. But for the most part, that's where I'm going with it. And usually I'm not really running to put a stop loss, because sometimes price can't come into here and, you know, I mean, price could come and try to take out that current monthly high. But knowing that the high had been already created for the month and we already mid to the end of the month, the likelihood of price going back and taking out that current monthly's high is very slim to none. So knowing that we already created the monthly high, the current monthly high, I'm looking for the current monthly low, old daily lows, old weekly lows, and so forth as targets or areas of targets. So once I know that institutional order flow from that higher time frame, then I can come down to the daily chart and then actually look to see where areas of interest are, and then we can come down to the 8-hour and 4-hour and try to refine these order blocks as much as you want to. But the more you refine, the less you will, actually be in position to execute on certain trades. So this is a very great way to come in, place a trade at a price area or a key level, and just let it ride. Let the trade ride, and you just, collect your pips and profit. And then you can take multiple positions. Price continues to go lower, but you're just operating from a higher time frame. So you don't have to check your chart every single hour on the hour, every minute on the minute. You can actually just trust that, structure, trust that price is gonna work out in your favor. Obviously, there's some other fundamental analysis that goes into it. So if you want to know a little bit more in depth on the total fundamental analysis on swing trading, check out the next video that I have here. Till next time, see you guys later.